Welcome to the Real Money Show, the number 18778 Silver, the website guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia. And joining us today, very special guest, Paul Wiseman, president of Guildhall Wealth. And today we're going to be talking about the markets. Let's talk about the week that was, Jerry. Not much happened in the week of precious metals. It was kind of flat, if not moving a bit lower today on Friday as we record the show. Now, obviously, they're saying inflation's not an issue. All of a sudden, we've gone from transitory to we have to fight it to there is no more inflation. So, first question out the gate, do you think this gives the Fed an excuse to pause?
Well, we're seeing bets right now from the CME projections on their target rate hike. There's a tool, a Fed speculation tool that they use to project, what they're anticipating. And things are shifting. There is a kind of a consensus that they're not going to be as aggressive. The FOMC was the main news item that happened this week. Again, really the markets are just concerned what the Fed does. News like retail sales and consumer confidence, although these news items are important, it really gets trumped by what the Fed says and what they do. FOMC minutes passed this Wednesday. They talked about hiking rates further. Their next rate hike is September 20, the 21st. But there is some waning expectations of a further 75 basis point hike, probably back to 50. And they're actually saying that they are seeing the pace of policy rate increases slowing. So the pace at which they're hiking, we're going to be expecting a slowdown and potentially a pivot, as I say.
I do wonder how they went so many years without raising interest rates that they've decided to do it all at once here. But also at the same time, Paul, doesn't it get a little irritating how we're all like lapdogs to the Fed? They seem to be we can't do anything until they tell us how things are going out in the markets. Forget what's going on at your regular grocery store or in your community. We just have to wait till the Fed tells us how things are going.
Yeah, but it's the left hand doesn't know what the right hand is doing. Excuse me. Powell came out and said that he's going to use any means to stop inflation. That means he's going to put interest rates up. I don't care how many Fed presidents they bring out from all over the country, all talking heads, all talking the US dollar up. They can move the US dollar up. That stops inflation a little bit. But it doesn't last. I mean, people are asking for pay increases. I mean, forget the US for the minute. Let's look at Canada. Let's look at the school teachers that are looking for a pay increase of over 11%. And Ford, for example, offers, he said, I'm going to give you 8%, 2% a year for 4 years is 8%. But they're looking for 11% plus. Real inflation is not 9%, it's probably closer to 15%. So offering 2% is an insult at the best of time. And now you're going to have every union. It's all about, cost of living increases. You can't give 2, 3, 4% when it's 9, 10, 15%. They've got double digit in England, inflation. Everything is going crazy. Right now, the price of gas is down. It's temporary. Trust me, it's temporary. It will go up next month, and all of a sudden, everybody's going to be chasing it again.
Yeah, well, this is kind of the thing, right? We're in this kind of lull. Of the Fed gets to say, well, we inflation is having a pause here at a moment, so maybe we can pause. But eventually, they either continue to raise rates, or I know that there's been talk from Bernanke and others talking about this idea of normalizing rates. 3% is their target, 3.5% for normalizing rates, which is to kind of say there's already an exit plan, and already a hard stop at a certain point. Because let's be honest, we all know, everybody knows that they're caught. They either raise interest rates and tank the economy. At some point, they're going to have to reverse course. And when they do, they start printing money. And then at the same time, you've got the government that wants to just deficit spend. So you have the Inflation Protection Act, right? They say They say on national TV, on mainstream news, we're only going after people with income of over 400,000. Well, did you guys hear that there was a congressman who entered in a bill to say that you will not go after people under 400,000, and they all rejected it?
Goodness gracious.
So they say one thing on TV, but then when it comes to the real deal, they go, no. Obviously, we're hiring 80,000 plus IRS agents with guns because we want to go after the little guys. We're not going to go after the people who have 400,000 plus because they're probably our donors. What do you make of all that, Paul?
Well, I really, American politics is something else. I mean, everything is added onto bills. It's hidden. I'm more concerned with what's happening in Canada right now. And I read a couple of articles today about the banks are building up reserves, which means they're worried about bad debts. People that use their homes as an ATM machine. They had lines of credit. They were spending money while COVID was going on. They were getting paid from the government. All that's going away. And now the rooster is come home to roost. It's as simple as that. I mean, everything is going up and you can't stop it. It's a freight train. You can't stop it.
So what about, Jerry, what about people who would be frustrated by the fact that gold and silver, now gold has really held in there, actually. If you compare gold to all of the major indices, I think gold's down less than 3%, less than 2% on the year, depending on the currency. But there would be some who say, well, how come it hasn't, where's my inflation rebate?
Well, the rebate has already happened. This is what we're seeing with, if you look at the rebate with the tax bill in the U.S., I mean, they were offering some tax incentives, tax breaks for electric vehicles. And immediately, Ford and GM decided to raise the cost of vehicles by the exact amount for the credits. So it's just, everything's just gone upside down.
But it's another head fake. I mean, I live in a condo. What am I supposed to do? Throw a cable over the balcony to charge an electric vehicle? It's not developed. Mm-hmm. It just can't happen that quick. I mean, this is like vaporware. It's an idea, but it doesn't make
it's bad.
Any sense.
Well, I mean, I know you don't want to talk politics, but it's bad politics because the infrastructure isn't there. They want you to have an alternative to oil, but the infrastructure isn't there. Now, if you left it to the free market, maybe it would get there eventually, but, you've got government intervention on this. And of course, in Europe, they have energy crisis. They're really worried about what's going to happen this winter.
But how do you create electricity anyway? Did you burn coal?
Fire up those nuclear plants?
Nuclear? I mean,
well, that's where those.
How do you charge? How do you get electricity?
That's where you get those memes, right? There's a meme of the car charger, but it's got a propane generator, right. Or there's one that's literally pumping oil to charge these things. Yeah, look, we've got an energy issue that's partly what's causing the inflation. But at the end of the day, we're talking about protecting wealth against inflation. And the fact is that inflation isn't going away, correct?
It's not going away. I think it's a runaway train. I think we haven't seen anything yet. I don't think you're going to see what's going to happen a year down the road. People that bought homes got caught up in the bidding wars, are walking away from deals. And in the States, it's even worse than it is here because you can't really walk away from a deal. But when you sign an offer subject to financing, the banks are really, coming down on financing. They value the home that you bought a lot less than what you paid for it. And, all right, so they're going to give you 80% of it. They're just not going ahead and taking any risks. I mean, we see what's happening every day. Customers come in. We talk to people on the phone. They are not trusting the economy right now. 8%, 10% inflation, eats away. It erodes. You've got $100,000 in the bank. You've saved all your life. And all of a sudden it's worth $92,000 and dropping.
Yeah, and it's not just
92 and going up, 92 and dropping. And the interest the bank gives you, you get more interest taking empty bottles back to Max Milk or the beer store. I mean, there is not enough interest there to cover it.
Jerry?
Well, I couldn't agree more with all of these fundamentals, but we look at the lull, going back to the lull in price action in gold and silver. Look, gold and silver versus many baskets and many other indices, it's very solid. We're not seeing the volatility, the downside volatility. As far as technical goes, the price of gold has reversed from the July high of 1814 as it trades back below today under the 50-day moving average, which is 1776. Gold's trading about 1750 US price per ounce.
And in Canadian, it's a lot more.
And it's a lot higher.
It's $1.30 today.
Right, and the Canadian dollar is again on the back foot. We're back to 1.30 on the FX. So, ultimately, this is the season over the course of summer. Historically, if you look back, gold and silver have a lull during the summer. This is a time to accumulate. As we see silver to gold ratio back at 91 to 1. This is time.
Is that what it is today?
Today it's 91 to 1. So this is a heavy buying signal for silver, because as we approach the crash season, which we call September, October, November, that is when we historically see silver and gold to explode higher. So this is a great opportunity to be buying at these levels, Jeremy.
Yeah, and look, this isn't just about hedging against inflation. This is also hedging against the fact that the Fed is out of chances here. They're out of which direction to take things. They can either raise interest rates and tank the economy, or they can print money and tank the dollar. Either way, we're looking towards the end of a system here, and this is why people want to get out of the system and have that protection, have that insurance policy, and especially with silver, because silver does nothing 90% of the time, and then 10% of the time, bang. So let's spend the next segment actually speaking about the potential here on precious metals, since we're able to get in here at the bottom of the market. Over the last couple of weeks, we've seen strength in the US dollar, which seems to me like an aberration. I'm not quite sure how the dollar continues to be so strong, but I mean, you can throw out your
Best
analogy
house on the worst street,
or the cleanest shirt in the laundry. Yeah. Jerry, do you have one?
Not right now, no.
No? Okay. What about the horse one?
That's a good one, yeah.
Yeah, the horse. Okay. Best horse in the glue factory. So yeah, it seems like an aberration that the dollar's getting stronger. Look, at the end of the day, the deficits continue to grow. You have to service these debts with new money. The Fed is going to continue to print money. It's only a matter of time before they start the printing presses again. And that's going to be it for the dollar. And at some point here, whether Jerry, you're talking about, the crushing fall, whether it happens in September, October, or whether it happens within the next 6-7 months, I think that things are going to get pretty crazy and hectic in the markets. And then when you look at the precious metals market, you have some pretty interesting things going on, specifically at the COMEX. Over the last year, you've seen the COMEX go from something like 150 million ounces down to less than 50 million ounces, or give or take 50 million ounces. And a lot of the experts, Jerry, are saying that if the drawdown of physical metal off the COMEX continues at the current rate, you could see the market get down to a level where we saw the major bottom last time in the market, and that could happen within the next 3 months. So speaking of buying opportunities, you were saying, look, one thing to look at is the ratio, right? Another is the amount of product being drawn down on the COMEX. Jerry, and then Paul.
Well, exactly. That was the alert last week we got from Ronan Manley of Bullion Star. He wrote that the stockpiles in the LBMA and the COMEX vaults are at a 6-year low. That's crazy. The inventory situation for exchanges gets even more dire when accounting for how much of that reported stock is not even available. If the outflows, he wrote, in the next 18 months match exactly what we've seen for the past 18 months, so another 18 months, the available physical inventory could approach zero, a default. That would snap the markets, snap the exchanges, and the realization of real pricing will come into effect. And that's going to be explosive.
The thing that you've got to really look at, if inflation in Canada is 9%, it's probably close to 15% because there's so many things they take out. We can't put gas in, we can't put rent in, we can't put hotel rooms in.
Take out strip loin, put in the sirloin.
You've got to look at gold and silver. If inflation is 10% and silver or gold drops 10%, it's still an insurance policy. There is more chance of gold and silver going up 20, 30, 40, 50% in the next 6 months to a year than losing 10% that we've lost because of the summer months. You've also got to look at the refineries closed down. for 2 to 3 weeks. In Europe, we buy a lot of PAMP Swiss product and a lot of other Swiss products. You've got to look at the Royal Mint. Also, whether it's closures or slowdowns, or they're starting to make 2023 coins, whether it's the regular coins, loonies and toonies or whatever, but they're also making silver maples, gold maples of all denominations. And for 2023, they've got to be made somewhere. So 100-ounce bars will slow down, 1-ounce gold bars will slow down. And it's
Well, I would
happening
think
right
that's
now.
probably why the product's being drawn down off the exchanges too. Is it, we know that wholesalers are probably pulling it off. They might be pulling it off the exchanges to send it to the refiners for additional product.
Well,
potentially
you're seeing a lot of where there used to be 1,000-ounce bars. Those bars are being sent to refineries and turned into, to be honest, about 10-ounce bars and kilo bars, because those are really, really popular denominations.
Now, speaking of price increases, guys. Okay, David Morgan was interviewed last week, and he's starting to pull out numbers like $1,200 silver.
Yeah, that's
and
crazy.
then Peter Schiff was interviewed this week, pulled out the number $1,000 silver.
Crazy.
And yeah, it's crazy, but you have to attach it to the value of the dollar. So,
Relative
for
to
example, if the dollar's worthless, gold's priceless. So at somewhere in between is where the price is going. However, I was looking at a chart this week, Jerry, that they were comparing the Dow in the 20s leading up to the crash, and it's a very eerily similar chart. And where it puts the Dow on a target to would be somewhere in the neighborhood of 7,000 to 8,000, basically putting it back to the bottom of the market in 2008. Now, of course, if that were to happen, Paul, you'd be looking at a 1-to-1 ratio of gold against the Dow, which it happened in 1980. That would be $7,000 gold,
Yeah,
which
but it's-
even from today, 7,000 would be great.
You could juggle all the figures you like in the world. I mean, it doesn't matter. I mean, the biggest one I saw this week was Walmart said, or they did it on food, because they're not selling other commodities in the stores. I mean, the average
Focus, they're
person just wants to
buying
get food.
Yeah.
The food in the last 3 years is up 21%. Well, that's a figure. But what is it up this year? Is it up 15%?
Oh, right.
And in the following years, 5%, and 6%, 5%, or whatever? I mean, food could be up as high as 20% on that 21%. I mean, it's crazy. You can juggle figures to make it look like whatever it is. I look at the price of gold and silver. You got it in your hand. It's real money. We know what it's worth, but it's undervalued. If you, like yesterday, they sold a stock called BBY, Bed Bath and Beyond. It jumped up to $28. They're saying the company is almost bankrupt. The biggest shareholder sold off 9 million shares, and all these investors, he made 68 million and somebody lost 68 million. It's as simple as that. Gold is real. You have to dig it out of the ground. It takes a lot of work to dig it out of the ground, and costs to dig it out of the ground, to ship it, to refine it, to do all the things it needs to bring it to the client. Costs money.
So it sounds like
it's real.
So it sounds like what you're saying is not so worried about where the price eventually lands, but the fact that you're better to have the money in your hand outside the system, because he who owns the gold makes the rules.
Well, but inflation confiscates your wealth. So if gold and silver, they can't confiscate it from, the vault, or it's in your hand, or wherever you got it. It can only go up in value, because the US dollar, though it's gone to $1.30, though it's gone up against all major currencies, it's mythical. It can't last. And as in the States and in Canada, you've got unions that are, renewing their contracts. They are not going to stand like the school teachers, like Ford has offered them 2%. In England right now, there's a train strike. 4 out of 5 trains are not running. Buses are probably not running. Everything comes to a standstill. And it's not just one union. You think of all the unions that we have, from garbage collection to municipal workers to hospitals to all types of things. we can give $200 million to Ukraine, but you can't give the nurses or anybody else any money.
Ouch.
Doesn't make sense. I know, ouch. But,
So-
nobody said to me, is it okay to give $200 million to Ukraine?
Mm-hmm.
I
Well,
see people laying in the street in downtown Toronto. If they're not well, send them to somewhere where you can look after them. But to give away money, you look after your own first. That's how it is. Charity starts at home.
So you'd like to see a Canada First policy. Now, Jerry, in Zimbabwe, where the currency's toast, they're trying to get gold into the hands of people to protect against this. Perhaps this is what could be offered to the unions. What do you think?
We likely won't see that. We know the unions are going to be continuing their ambitions to they love the printing press. They love
Right. This is my question. The fact is the unions come out and they say, well, we need a pay increase because of inflation. And where's that money supposed to come from? They just raise well, we can fire half of you and just raise everybody's rate and everyone has to do twice as much work, or we're going to print it out of somewhere. Where does the money come from?
And that's their power. That's their currency, is just being a lobby group and lobbying and creating some type of popular demand for something. But in reality, we know where the money is going to have to come from: the taxpayers, the Canadians. And this is why we see a new Angus Reid poll came out just last week that the majority of Canadians are losing confidence in the Bank of Canada. They raised interest rates by a whopping 1%. But it continues. If we looked at the inflation data that came out of Canada last week, the only thing that went down was the gasoline prices. Everything else went up, and it's going to continue to go up. And these are the tailwinds that are supportive of our gold. We talked about geopolitical risks. We're talking about around the world. Zimbabwe is one that they're actually seeing stabilization in their currency with the release of gold coins in Zimbabwe. It's remarkable. So many tailwinds for gold supporting, and the only one the headwind and pushing gold down right now is this mythical strength of the US dollar. And how they're doing that is just talking it up. Saying that we're going to be raising interest rates is not enough. The people see it, especially with the mere fact that the gauges that we use to measure inflation are skewed. The measurements for prices are skewed. People know inflation is much higher than 8%. It's not 8%. We can all agree on one thing, that inflation is north of 15%. And this is why gold and silver right now are being bought more than ever before.
You need that insurance policy. The number 1-877-8-SILVER, the website guildhallwealth.com. Paul?
Yeah, you go into the high-end malls, the wealthy are not suffering. They're still having 3 meals a day and they're still eating out. I was in a restaurant the other day. The prices have I can afford it, but they were astronomical. Astronomical. When you're paying $80 for a steak and $9 for a bottle of water, somebody is abusing. I understand COVID hurt a lot of restaurants. Trying to get it all back in one day is difficult. For me, the best thing to do is own gold and silver. If you don't have a TFSA or an RSP, I recommend a TFSA because it's a tax-free savings account. And we partner with Questrade, and you can put gold and silver into that account. And you can put, I think, up to about $85,000 if you've never invested at all right now into a TFSA. And this is what an opportunity. With silver trading where it is and gold trading where it is, it's like finding money. As I said earlier, if inflation is 8-10%, your money is being confiscated. Gold has not come off 8% or 10%. It's only down 3%. Silver is probably down 10% over the last couple of months. It could only go up from where it is. There is a shortage of product. We can't get product like we were getting before. People are starting to smarten up and buy gold and silver, taking it home, putting it in the depository, putting it in the vault in Brinks, or putting it into a registered account where it's safe, it's allocated, segregated, it's your product with bar numbers. It's the way to go. Mm-hmm. Protect your wealth. That's all I can tell you.
And listen, this out of Gold Telegraph, Russia's proposing its own international standards for precious metals. We'll talk about that in the next segment. India's launched its own international gold exchange. There's another
Saudi Arabia.
yeah, they're considering establishing their own gold refineries, and then you've got China producing the most gold. They finish by saying, "Are you not entertained?" The fact is BRIC nations are making massive moves towards gold and an underpinning of currencies with gold, and they've got the most amount of people. So let's just keep that in mind as we go into the next segment. If you're looking to acquire gold for your portfolio, the number's 18778 silver. The website guildhallwealth.com. It's the Real Money Show on AM 640. We'll be right back. Looking at the microcosm of our desks here at Guildhall, there's definitely a lack of faith in what's happening in the economy and with the current structures, the financial structure. And so people are seeking safety. They're seeking a safe haven. They want that insurance policy. Yes, we've been talking today a lot about inflation. That's obviously a huge part of it. I try to point out to people, there's also the fact that income tax is massive, right? The HST 13%. The government could easily fix this inflation by simply saying, you know what, moratorium on the HST so that Canadians can thrive. Now, Paul, you made some great points in the last segment saying, perhaps we could do with a Canada First policy. We're not being asked at all what's going to be done with all of this deficit spending because, the government doesn't actually produce money. I mean, they make money out of thin air, but they don't produce any value to create that wealth.
They don't make widgets.
They do not make widgets. They just take in the taxes, and they seem hell-bent on deficit spending until the dollar's worthless. Now, we had this clip of this little girl speaking. We put it on our Telegram, and she was showing that, and this goes back to the 70s, that every finance minister abdicated their right to use the Bank of Canada for interest-free loans, and they're borrowing the money from the Fed and having to pay interest on it, and so therefore our income taxes have to go up. Again, if we're paying 30-40% income tax, 13% on top of that, inflation's at 15-20%, I mean, we're looking at almost 70% of our entire wealth. We are all debt slaves. Every single person listening to this show right now, we're all debt slaves. We're all in this together. I don't care what side of the political aisle you're on. And when it comes to precious metals, the buck stops here. Because gold and silver have no counterparty risk. They've been around for 5,000 years. You cannot print them. They do not depend on your ability to raise interest rates or lower interest rates, to stop the spending, to increase spending. No, they don't demand any of that. You can only increase the supply by maybe maximum 2% a year. What it costs to pull it out of the ground right now, especially on silver, it's like $18.50. Mm-hmm. We're at that right now in the current market. I think gold, there's a bit of a higher margin. So the idea is, here's the opportunity, here is the window for you to be able to get out of this just psychotic financial system that's happening and get to higher land, right? Higher ground, and to just get out of it, get into your safety boat. And you could complain about the price. Okay, fine. I don't know if anyone's complaining about the price.
Not really.
But the fact is isn't this the entry point you want? And if you already have it, okay, you can wait. The next 6 months are going to be crazy. Mm-hmm. I mean, they're calling for the darkest winter in Europe. They're calling for food shortages. I mean, this is the type of insurance policy you want to have, isn't it, Paul?
Yeah, but it's always our policy. It's better to be 3 or 4 months too early than one day too late. When silver and gold start skyrocketing and people, want the product, buy now. This is the time to buy gold and silver. As I said, if inflation is 10%, 8%, 10%, 15%, you've got money in the bank. What's happening? Your money's being confiscated. If you put it into gold and silver, it's physical. Can it drop 10%? Can it drop 15%? Very unlikely. Can it go up 40, 50%, 100%? Yes, it can. Can it go up 500%? Possibly. I don't want to, sell you a dream that, silver's going to go up.
You're sitting there saying, look, let's break 30, right, Jerry? It's let's break 30, then get to 50.
I mean, you could look at it that way. If gold and silver are just strictly your insurance policy, you don't really care if it moves up, 500, 600%. But we have to remember what gold and silver have done historically. We're facing some serious headwinds financially, from inflation to de-dollarization to the over-digitization of your wealth assets, capital controls like we've never seen. This is the time where we have to look back at the 70s and 80s. What happened during this time was stagflation, and what gold and silver did was more than just insurance. Gold went up 8-fold during this period, and silver went up 11-fold during this period. Now we exacerbate the figures a little bit because debts were a lot lower back then. The trust was actually a lot higher. We have lost trust. We're seeing, if we look at all of the nations we're witnessing a global de-dollarization. Do we understand what really that is? The U.S. dollar is the world's reserve currency. Everything we see is
Not
priced.
for long.
It's the tectonic plates are shifting underneath us. Unless you know what to look for, like you're listening to this show, you're getting a better idea of what to look for to see those signs of what's happening. You see all of these countries around the world saying, we got to get gold. So you can see that there's this massive shift that eventually, how do you put the trust back into the system? You go back to 5,000 years worth of trust and faith, and that's gold and silver.
In the early 2000s, I was selling silver at $3.80, gold at $250 an ounce. People bought gold and silver, snuck home, didn't tell anybody about it, was kind of embarrassed to say that I bought gold and silver. And, at one time, silver went to $50 and gold's gone over $2,000. Will it go up again? Yeah, absolutely. It's like housing. Housing, we've had an unbelievable run. It's come off a little bit, but, you don't day trade your house. You don't have to day trade gold and silver. Gold is for your golden years. Put it away. Buy on the dips. You're going to make money, lots of money, and you're going to be safe. You're going to protect your wealth because it can only go up.
Yeah, this is the idea of not just protecting your current lifestyle, but also taking advantage of the opportunity here that there's not a lot of things out there that are undervalued right now, where you would have the potential during this sea change to be able to increase your wealth and your lifestyle.
Well, are you going to put
and
your
that's what I
money
truly believe is going to happen
in metals. Are you going to put your
metals.
money into natural gas because that's gone up to ridiculous prices, or lumber or copper or whatever the thing is?
If you have the means to play commodities, hey, look, we're not the only game in town.
We don't deal in paper products. We don't deal in stocks. We don't deal in futures, options, certificates. We deal in physical product. If you don't have a TFSA, that's the best place to start and put gold and silver into a TFSA. It's a tax-free savings account, or go to our website, guildhallpreciousmetals.com.
To protect yourself from the immense amount of debt that's going to be created, continuing to be serviced, and the amount of fiat currency that's going to be printed. And at some point, there's an invisible line where the faith runs out. Faith runs out. In Argentina, when they had hyperinflation, and I think it was the 90s, you could run to the US dollar, right? That's it. We're not taking the current currency. We're going to take the US dollar. Well, what happens when the world's reserve currency is hyperinflating? What happens when the rest of the world doesn't trust that currency anymore? Well, we're seeing that tectonic shift around the world of countries saying, you know what? We're going to move to gold. We're going to try to create a new standard, and something's going to give. Now, everything says, what I see in our clients and everything tells me is that we have to take care of ourselves first. You depend on a large entity like the government to take care of you. Don't be alarmed when the day comes that they take away more from you than give. So this is all about being a personal sovereign and being your own central bank and making sure that you are out of harm's way. And that means having assets that are negatively correlated to the dollar. Now, one other thing that we can do is diversify. Some people might say, well, what happens if they try to confiscate? Well, I don't think they're going to do that because they're already confiscating through taxation and inflation. And, they're already taking 60, 70% of your wealth away. But one thing you can do that's very discreet is, and it's a best kept secret, is a natural fancy color diamond, right, Paul?
Absolutely. And with natural fancy colored diamonds, as Jeremy said, it's a very, very well kept secret amongst the wealthy that have been buying colored diamonds for a long, long time, putting them away. It's not a day trade. It's not something that you hold for 5 years, you hold for 10, 15, 20 years, pass it down to your family. We have right now a couple of incredible pink diamonds from the Argyle mine. The Argyle mine closed last year, in October of last year, and they produced 90% of the world's pinks. Now, right now, I was able to obtain two beautiful diamonds. One's a .26, and it's a fancy pink VS2, which is a great quality diamond. It's an Argyle for less than $50,000. This is the type of investment that can increase 100, 200% over the years. I've also got a .27, which is also a fancy intense. It is an emerald cut. Again, just under $50,000. This is the type of investment that you can put aside for your family. It's not something, if you have the spare cash, you don't know what to do with it. If you're leaving your money in the bank and you're being confiscated at 8-10% a year, you might as well put something into a diamond that could make you 20% a year or maybe even more, because there is no more pink diamonds coming out of the Argyle mine. And this is a really, really great investment.
Now, Jerry, Paul mentioned that these two diamonds are both intense. What are the color grades for those who have never heard about diamonds before?
So as we know, for those who don't know in color diamonds, color is the most important factor. So when we look at color grading, fancy would be your entry. There is light. Guildhall does not offer light diamonds. We do not procure and go after light diamonds. We start at fancy, which would be the least saturated of the colors. Then you move up into more rare colors, such as intense, which you start seeing the saturation started to get deeper. And then you move up to vivid. And once you hit the vivid, you've hit the rarest category. So what we try to do here at Guildhall is we try to push the categories up, try to obtain the highest color, carat weight, clarity to obtain an investment grade stone. So these diamonds are tremendously beautiful. I've seen them myself.
Now, Paul, you mentioned as well these two diamonds are both VS quality.
VS2, yeah.
VS2. Now, a lot of blue diamonds, for instance, you see more internally flawless. And blue is a very rare. Red is going to be the most rare. Then you have orange, blue, purple. Green is also right up there with rarity, and even in green, you're gonna find a lot more internally flawless. Now, when you go to a jewelry store, they look for eye clean. That would be VS or higher, but pinks tend to be VS. You don't tend to see internally flawless with pinks. Why is that?
Because they come with a lot of inclusions, and to polish the inclusions out, if you start off with a .88 diamond, and you decide, well, I want to get rid of some of these inclusions because they're on the table, which is on the surface, or on the sides, on the girdle, and you start polishing and cutting, you're going to lose maybe 15, 20% of that diamond. And when it comes to color diamonds, especially pinks and reds, you want to keep that diamond as big as possible. So we only buy pinks with VS quality. And not only is VS quality, the size of the diamond has to be perfect. The dimensions have to be perfect. If, we buy a diamond, it's no good to be very tiny on the table on the top and very long, because you're not going to get any color, any sparkle from that diamond at all, because it just goes in one side and goes nowhere. So the scintillation is important, the color, the cut, and the clarity. And the carat weight is really important.
Jerry, if someone was going to go out, buy a pink diamond for the first time, what's something they should a couple things that they should absolutely avoid?
Not buy an artisan man-made.
That's one. You want to try to get into the rarity. You want to get as rare as possible. And once you've realized that, I'm aiming for generational wealth here, there is a segment of investors, we're seeing that BBBY stock, the meme stock, these type of quick flips. Once you realize that this is generational wealth, then pink diamond should be attained. Once you have your gold and silver in your portfolio, this is the perfect way to round out a hard asset portfolio. Guildhall does not compromise on precious metals. We do not compromise on diamonds as well. So an entry-level stone like one of these is perfect. This is a money in the bank, as they say in New York. These are money in the bank type diamonds, and would love to introduce this through a diamond discovery session. Come have a look. We'll show you what makes an investment grade stone, what does not make an investment grade stone, and how you can add this to your portfolio.
Paul, we have about 30 seconds left. How come we're not seeing any of these type of diamonds come to market these days? I mean, there was a time at Guildhall where on any given month, we might have 4 or 5 VS quality diamonds under 40.4 carat.
Yeah, but COVID had a lot to do with it. The cutters and polishers, whether they were in New York or Tel Aviv or Antwerp, they weren't sending out any product on consignment. They were worried about, if I send the package out to someone, will they still be
Has
there?
that increased since then?
There's less diamonds out there, and the quality is not there. And as I said, the Argyle mine closed, and they produce 90% of the world's pinks. So anybody that's got Argyle pinks, just push them to the back of the safe. They know they can sit on them for 10, 15 years, 5 years. It doesn't matter. They're going to make money on that product. So yellows are becoming very popular again, especially the vivids in internally flawless and the intense. And we've got some beautiful vivids and intense yellows that make a great investment.
Well, I want to thank you guys for joining us today. The number 18778-SILVER, the website, guildhallwealth.com. If you want to learn more about natural fancy color diamonds, you can give us a call, go to the website, and we're happy to send you some information or even set up a time for us to perhaps even look at a few diamonds in person. Paul, great to have you back on The Real Money Show. Thank you again. Thanks for all the listeners for joining us, and we look forward to speaking with you next week here on The Real Money Show on AM 640.